Good evening, everyone. Hi, all the students. I hope you are doing well. I hope you are sitting upright. I hope you have books and pens in front of you. And welcome back to the class of auditing. Quickly give your attendance, write down, mark your presence here that you are present. And you have been doing revision. That is the most important thing. Whatever we have studied, I hope you have been doing revision. Yes. Good evening, Kuldeep. Good evening, Archana. Good evening, Pooja. Good evening, Tanu. Good evening, Adil. Good evening, Navneet. Good evening, all of you. So, welcome back. We are on the second lecture of chapter number 9. Before we go ahead, I want to see how many of you remember what we studied last time. So, quickly tell me which type of expenditure audit checks efficiency, economy, and effectiveness. Quickly tell me which type of audit checks economy, efficiency, and effectiveness. Correct. Adil is the first one to respond. Performance audit. Perfect. Correct, Adil. Next question is, which audit's other name is regularity audit? Which audit's second name is regularity audit, or it's sometimes called as regularity audit also? What kind of expenditure audit? Quickly tell me. Other name is regularity audit. Quickly tell me. Audit against rules and regulations. This time Pooja wins. Pooja has given absolutely correct answer. Which audit checks the wisdom of the transaction? Which audit checks the wisdom of the transaction? Let's see who gives the answer first this time. Which audit checks the wisdom of the transaction? Again, Adil has given the correct answer. Propriety. It's not proprietary. It's propriety. Okay, not proprietor. It's propriety. Pooja has given the correct spelling, but Adil gave the first answer. It's between Pooja and Adil only. No one else. Okay, let's see next question. Within how many days can supplementary audit? Quickly, let's see who gives the first answer. Is unstable. Maybe some fluctuation happened. Yeah, now is it okay? Now it's showing full. Yeah, yeah. 60 days. Correct. Let's see who gave the first answer. Again, Adil and Anil, almost same time. So yes, 16 days, 60 days. 60 days from which date? 60 days from what? Now type that. 60 days from what? 60 days from receipt of audit report. Perfect. Great. So this was our quick short revision. I hope we can do it as often as possible. So yes, shall we start with a new topic now? We completed government audit. A very small portion is pending, that is audit of local bodies, which is sort of a part of this only. All right, so let's start with a new topic. Audit of local bodies. My voice, everything is clear now? Everything is clear? Give me a quick yes, no. All right. Yes, okay, okay, great. So let's come. Audit of local bodies. Okay. Audit of local bodies, which basically means municipal. One second, small mistake. Municipality. Okay. So we all live in certain areas, towns, cities, where we have local self-government. What is it called? Local self-government. This government, this structure helps run the health, sanitation, roads, education of local areas. So, an organization, a body, a local body that manages all this is called as local body, local self-government, or municipality. Okay. So, let's understand first that what are the different kind of municipal governments that exist. Okay. First is municipal corporation. See, in your book, there is a brief introduction given about what is a local body. We will see that from the perspective of just understanding an MCQ, not detailed theory answer. I'll tell you where you have to focus for detailed theory answer. So as of now, just go with the flow and just understand. Okay. So there are municipal corporation. Then there are municipal councils. Then there is notified areas committee. Then there is town area committee. And there is cantonment committee. Okay. So usually these are the 5 kind of things. All the big cities usually have municipal corporations. Certain areas have municipal councils. Certain are notified by government as notified area. That depends on whether it's a very deeply sensitive ecological area, a tribal area. So they are notified by the government as notified area committees, which specifically maintain the ecology of that area. Then town area committee can be there, which is smaller than the cities. And cantonment is usually depends. For example, there is something called as Wellington cantonment in Tamil Nadu. So that area is Wellington cantonment. It has fully, it's like a town for people from military and defense. Okay. So these kind of different committees can exist under municipal government. Okay. Now, what do they do? All of them collectively do 3 main things. That is regulatory function. Then they do maintenance and development. Their job is to make sure that the local laws are followed by people. So, for example, traffic laws, property related laws, waste disposal related laws. So, their job is to maintain laws regarding local is followed. Second is maintenance of hygiene, maintenance of law and order, maintenance of roads, and development means bringing new schools, new hospitals, new roads, new pipelines. All of this is also part of their job. So usually these local governments are focused on regulatory aspect, maintenance aspect, and development aspect. Okay. And they spend their money on all these things. That is health, sanitation, road, education, safety, even ensuring local safety. That also becomes a part of the local government work, which is done by local bodies. Now, to do all this, they must have some amount of money. They should have some sort of funds, right? So usually this local government to do all these expenses has something called as property taxes, water tax. Then there is something even called as professional tax. I don't know if you have heard about it. Each state can have a different. So if you have an employee certain after certain number, you have to give like 2,500 rupees from the salary and pay it to the government. So there are many different kind of ways in which local government earns or has some receipts. But there are other kind of things also called as grants. Local government also gets something called as grants. There are three ways for them to get grants, something called as general purpose grant. Now, general purpose grant means they can use it for any purpose that they deem fit. Okay. So there is a money allotment that is either done by the state government or central government to them. They receive that money, and from that money, they are able to do expenses. That voice is breaking. I don't know why voice is breaking. Is it breaking for everyone or it's clear? Navneet is saying it's clear. Pooja, just check your system once. Others, can you respond? It's clear. Oh, Tanu is saying clear, clear, clear. Okay, then I think it's clear. Just check once, Pooja. Okay. All right. So the first kind of grant is general purpose grant. Okay. What was I saying? That it is given as a whole and sole money to the local body, which is your municipal corporations, and they can use it for the purpose that they seem or they deem as correct. So there is no direction that you can use this money only for this, you can do this money only for this, nothing like that. Second kind of grant they receive is specific purpose grant. Suppose my city wants to build a science center. We want to create a science center, and for that I am applying for grant from different institutions, and for that purpose I receive money. So those are called as specific purpose grant. And next is called as statutory and compensatory grant. What does statutory and compensatory mean? It means, understand this. Do you know that before GST, there was something called as VAT? VAT, sales tax, VAT. Do you know about it? Have you heard the words? VAT. How many of you have heard? Value added tax. Yeah. So a lot of the value added tax income used to go to the state governments. But then what happened? GST came, and sometimes it happened that many governments lost a little bit of income. So now you get a portion of GST, but earlier VAT was fully yours. Then sales tax was there. Sometimes due to some law change by other governments, by state government has changed some law, central government has changed some law, and because of that local government loses income. There was also something called as entertainment tax. So when I was growing up, a lot of movie tickets used to have entertainment tax on them. Okay. So after GST came, that also went away. So sometimes due to some policy change or law change by the state government or central government, the local government can lose some income. And to compensate that, some grant is given to them. That is called as statutory or compensatory grant. Is everyone clear? So these local bodies get three main types of grants. That is general purpose grant, specific purpose grant, and statutory and compensatory grant. Till now, everyone is with me? Till now, everyone is with me? We are doing something very different from the regular audit stuff. That's fine. Okay. Now, to manage finance in these local bodies, financial administration of local bodies is divided into three main things. Okay. It's divided into three main things. First, there should be a budgetary procedure. Then there should be expenditure control. And third, there should be accounting system. So from the perspective of money, three main things needs to be done smoothly in a local body. First one is budgetary procedure. Budgetary procedure simply means that before the allocation is done, provisions are made, allocation is done, and provisions are made. Why is this done? so that there is financial accountability. What is there? Financial accountability is there. Someone has to take responsibility. Also, there is control over expenditure. When we have budget, we know that we can only spend this much on city decoration. We can only spend this much on sanitation. We can only spend this much on education. We must spend this much on health. So that is why the first important thing that is necessary from financial point of view in local body is to have good budget creation procedure. Okay. Next important thing is there should be proper expenditure control. Okay, you have made the budget. Usually in our country structure, if you talk about the whole country, there is a legislative authority and there is an executive authority. Can anyone tell me what this means? There is a legislative authority. There are people who are into legislative and people who are into executive. What does it mean? What does it mean? Court and bureaucrat. Very good. Means there are people who make rules and there are people who apply those rules and execute those rules. That much is clear to everyone. Everyone understands that. But you know what is unique about local bodies? The unique thing about local bodies is their local self-government. So they have to take a lot of decisions regarding the law and order of the local people. Plus, they also are the people who execute it. Understand? Usually, legislative and executive are different. But municipal corporations, councils, committees are structured in such a way that they have to take decisions regarding the local laws and they are also the people who execute it, which means they are themselves deciding that how much property tax will we take and they are the people who are also collecting it. Do you understand? And that is why in places like local bodies, audits are very important, external audits, because the legislation and the execution is being done within the same structure. And that is why audits become important. And that is why it has been suggested that even internal audits should be done regularly to keep a check that whether things are being done properly or not. So a lot of municipal corporations who are large in nature also get internal audits done. Is everyone clear? So the next important financial administration that is required in the local body is expenditure control. And the last thing is it should have a proper accounting system. As of now, it is neither simple nor comprehensible. As of now, the accounting system of municipal authorities is not simple and neither is it very easy and precise to understand. So there has been a continuous progress, change, experimentation, trials being done to make it better. But as of now, the accounting system is a little complicated, which we are not going to learn as of now, because for each state and each local government, there can be different direction in ways in which it is done. Okay. So what is the financial administration of local bodies? Budgetary procedure, expenditure control, and accounting system. You should just know this. I am not telling you to memorize this. Is that clear? The memorization part will start now. This is just an introduction so that you understand what local bodies are. Everyone clear? Okay. Now let's understand. So now you have understood what is the importance of audit. Okay. Now, why do we do audit? What is the objective of audit in local bodies? What are we trying to achieve if we want to do audit of a local body, what are the things we want to look at? What are the things we are interested in? Okay. The first important thing, go with my flow as of now, then we'll see the book. Okay. The first important thing that we think naturally, that there should be good system. See, if the system fails, everything else fails, right? If I don't have a good system to collect property tax, then obviously there will be fraud, there will be error, true and fair view will not be there, everything will follow. So the first important objective is that is the system correct? So first objective is to check strengths and weakness of systems of financial control. Okay. System is very good. System is nice. Why is the system created? System is created to ensure two main things. So if you are even running a small restaurant and you create a system, why do you create a system? भाई GST में कोई गड़बड़ ना हो जाए, सही तरीके से GST होना चाहिए. Or some TDS should not be left out to deduct. We create systems to ensure legal and other requirements. Why are internal control systems created? To ensure all the legal structures are fully followed. And second, why are they created? So that any error and fraud or misuse can be detected. Two main reasons. First, that all the legal and administrative requirements are properly followed, and any error or fraud or misuse is correctly monitored. Why is this misuse? We have to check in government audit propriety, which means value being received for money spent. So as an auditor, I have to check that whatever money this municipal corporation is spending, are they receiving full value of it or are they wasting the money? And why do we do all of this? Why do we do all of this? All of this is to check that there is true and fairness in financial statements. See, what are the objectives of audit in a local body? First, I want to check there is proper system. Why system? So that all the legal and administrative requirements are correctly done. Any error and fraud and misuse is properly detected. What kind of misuse? So that we can know whether expenses are being done propriety in nature, which means whether value is being fully received on the money spent. And what is the overall objective of doing the whole audit? To check the true and fairness. Is everyone clear? Is everyone clear? This is your fully book answer. Can you see in your book? The main important objectives of audit in a local body. Mark this as very, very important. Okay? Direct question. Everyone clear? So what are the objectives? Even if you do up and down, that's completely okay. So what I remembered first, I am able to remember this point first. So what is the main objective of my audit? To check strength and weakness of the system. Why do I do it? So that all legal and administrative requirements are checked and any error and fraud and misuse is detected. Why misuse? So that we can see whether value is being fully received for money spent. And why do we do all this? So that we can report on fairness of the content and presentation of the financial statement. Is everyone clear? Can you remember this? Can you remember this now, objectives? Can you remember objectives now? Yes. Yes, ma'am. Okay. Good. So this should be learned by heart. No ifs and buts. Done? Next. Next, if you will see, I'll just read out a few things to you, okay? Just see your books. The external control of municipal expenditure is exercised by state governments through appointment of auditors. There is only one way that state government can interfere and see what's going on is through audit. Now, corporations like Delhi, Mumbai have own power to appoint their own auditors also like a company. The important objectives of audit I have already done. Audit is a method of financial control. This provision is coupled with the privilege of ultra vires. What does it mean, ultra vires? What does ultra vires mean? You have studied this word. What does ultra vires mean? Quickly tell me. Beyond authority. Exactly. So when we are doing audit of a municipal body or a local body, is it possible that we'll also come to know of instances or situations when something has happened that is ultra virus? Okay. So when we are doing audit, we can also come to know about the cases of ultra virus. Okay. Next is nothing important. You can ignore that. Come to this part. Audit program of local bodies. Mark this as important. This is asked many times. Multiple times it has been asked. Okay. Audit program. First, who appoints? Please remember this for MCQ. Local fund audit wing of the state government. Please remember this for MCQ. Local fund audit wing of the state government is generally responsible or in charge for the audit of municipal accounts, but some bigger municipal corporations like Delhi, Mumbai have power to appoint their own auditors. Okay. So if you are an auditor, if you are appointed, so suddenly Delhi Municipal Corporation has approached you that you do our audit, please ensure that they have appointed you as per the law, as per their powers. So it is the duty of the auditor to check that his appointment is valid. Do you understand? It is my job as an auditor to ensure that my appointment is valid. So usually the appointment is done by the local fund audit wing of the state government, and in some bigger corporations, they appoint their own auditor. Now, what is auditor's concern? Can you see repetition? Can you see repeated answer? Again, repeat. So, auditor concerns, same as objectives. Just write down here, same as objectives. There are many other. Calcutta also. Chennai also. So many are there. That keeps changing. That depends on the notification by government, okay? That depends on the notification of government. What you can do is you have an option. So wherever you live, you can go to the local government's website and there will be audit reports available to download. If you see a chartered accountant's name in the audit report, it means they have appointed. Otherwise, you will see the name local fund audit wing. Is that clear? So you will know whether in your city, who appointed the auditor. Is that clear? So I have seen multiple audit reports over a period of time. But yeah, cities can change. Any other doubt, Navneet? I think a few years back, I even saw Surat audit report signed by an external auditor, not local fund audit wing. But I don't know if the rule is still same. Okay. So you have to see year to year. So auditors' concerns, you can just write down as, that is what I'm saying. Government have their own criteria on which they allow these things, whether it is on the basis of the property tax collected, whether it is on the basis of the size of the town. That is their own criteria. That on what basis they decide that whether some municipal corporation is a large corporation or not. It is on the size of the city. It is on the size of the amount of money they handle. It depends on the government. Is that clear? The criteria are not for us to know. Okay. So this is repeated. Just write down here same and objectives. Yes, it depends on a lot of factors. So same as objectives is done. Next, can you see audit program? Auditor has to check rules and regulations that expenditure are as per provisions of law and in accordance with financial rules and regulations by competent authority. Can you see authorization? Auditor should see that all the types of sanctions, either special or general, are by competent authority. Can you see? Auditor should see that there is provision of funds. Auditor should see different schemes, programs, and projects are running economically and getting expected results. Where did you study this? Where did you study this? Where have you studied this already? Quickly tell me. Propriety audit, expenditure audit. Yes. So, what is this answer? If you are asked to write audit program, what is audit program? Appointment plus objectives plus expenditure audit points. Simple. Is that clear? So audit program is simple answer. If you're asked in exam, don't worry that I have to write the whole audit program. No, very straightforward. Don't write from your own fully different answer. Please follow this. Audit program of local bodies, you have to write appointment, objectives, and expenditure audit points. So appointment is usually by local fund audit wing of the state government. Some corporations are allowed to appoint their own auditor. Second is objectives, auditor's concerns. So what is auditor concerned with? Remember that whole diagram: internal control system, financial control system, legal and administrative requirements, detection of fraud and error and misuse, how misuse, value of money is being fully spent or received or not. And last is the fairness of the content and presentation of financial statements. So that is concerns. Next, it comes to expenditure audit points. Audit against rules and regulations, sanction, audit of sanctioning, provisioning, and lastly, performance. Done. Everyone clear? That's it. We are done with audit of local bodies. Any doubt till now? Very easy, very, very easy topic. Very scoring topic also. These two things, if you remember what I have told you, you can get full marks. All right. I'll go to the next topic now. Okay. Next topic. Audit of NGOs. Audit of NGOs, that is non-governmental organizations. Non-governmental organizations. Pay attention. Usually, all the non-governmental organizations are involved in welfare work. Okay? They are involved in the work of welfare, which means they are either involved in giving education, relief from disasters, helping people who are orphans or in the old age. Okay. So these are the different religious institutions. They are all part of non-governmental organizations. Okay. Now I have a question for you. Suppose I start teaching a few kids who are not going to school, who are homeless, living under a bridge, and I start teaching them every day. Okay. So every evening, 5 o'clock, we gather and I teach them for 1 hour. And now around 50 children are studying from me. You tell me, is it illegal if I am doing this work without registering my NGO? If I am doing this work of teaching those poor students, am I doing something illegal because my charity organization is not registered? No. So is it compulsory to be registered? If you want to do, yes. But then if I want to collect donations for those kids, so suppose Ashlesha says, ma'am, I want to give you money so that whatever needs you have, you want to buy pencil for them, you want to buy books for them, you can buy those things. I'll give you some money. But then will I need registration? If someone wants to give a school land to me and they want it to be registered in a name of the NGO, suppose I call this NGO Drishti. So will that NGO need to be registered if I want to take any immovable property? Yes. So while the existence of any welfare work does not necessarily means that you have to be registered, but if you want any monetary or immovable property to be involved, you need to be registered, right? So usually there are 3 ways to register an NGO. Okay, pay attention. First is as a trust. Have you heard about trust? The most common thing. So if you're registering as a trust, which means you are registering under Indian Trust Act 1882. Okay. So the one way to register an NGO is as a trust. Second way to register an NGO is as a society. That comes under Societies Registration Act 1860. Okay. And the third way to register is as a company under Section 8 of Companies Act 2013. Can you see these things? So there are 3 ways to run an NGO and register an NGO: as a trust, as an society, and as a company. Okay. Now, usually these are central acts. But state can have their own acts also. Now remember this. While there is a central act called as Indian Trust Act and Societies Registration Act 1860, there can also be individual states having their own acts which are allowed by the government to function in the respective states. So, for example, Gujarat and Bombay have their own act called as Bombay Public Trust Act. So, on them, this Indian Trust Act is not directly applicable. The act directly applicable on them is Bombay Public Trust Act. That is why you don't study these acts in detail. After becoming CA, if you are interested in deep dive, then as per the respective act of the state, you have to study. Is that clear to everyone? But we will get a general overview of what the overall Indian Trust Act and Society Registration Act is about. So states can have, why does Gujarat have Bombay Public Trust Act? Because it was created before the division of the Gujarat and the Maharashtra state. Okay, so in Gujarat, still Bombay Public Trust Act is followed, and whatever societies are registered and trusts are registered are under that. Now, if you will ask me, ma'am, what does this three differ by? So there is no such question in your book, okay? But I know this question usually comes to students' mind, so I just want to address it. So if here, let's say, Pooja wants to start her own NGO, whether she will register as trust or as a society or as a company is a very personal decision. But there are some factors. For example, if you have registered as a company, you will have a centralized identity. It is easier for other people or foreign funding to be received because it is very easy to check the existence of a company. You can easily check on mca.gov.in. You can check whether the company is properly filing their annual returns regularly, who are the trustees and directors involved. You can check their MOA, AOA properly. So it's very easy and transparent if you register as a company. However, trust and societies are usually preferred as a method when you are creating a religious institution or you are creating a school. So in that way, these local structures are preferred and local laws are preferred, especially when there is a lot of immovable property, land, buildings are involved. Society is usually used to register more artistic and association form of things. So, for example, Ashlesha is very about Hindi poetry. And she wants people to be again interested in Hindi poetry, people to take interest in Hindi poetry. And she finds Navneet, Pooja, Adil. So if she finds 5, 6 other people who are also interested in making other people know about Hindi poetry, and together they create a poetry society, Hindi poetry society, through which they publish Hindi poetries, they collect Hindi poetries, they award people who write Hindi poetries, they've created a magazine, but they don't want to earn money out of it. So it is still a charitable activity, but it is not in the nature that you are used to of seeing, that it is not helping a poor kid. So it's not necessary that it's going to help someone who is poor, but it is any work that is leading to some welfare. Is that clear to everyone? So what way we register our NGO is a very, very pros and cons based decision depending on what your needs are, what kind of growth you want to see, and what kind of work you want to do. Now, usually, if it is a trust, there will be trust deed and there will be trustees. So all the rules of a trust will be written in the trust deed. If it's a society, there will usually be rules and regulations. Okay. And here society members will be there. And here, as usual, your MOA, AOA will be there. Now, if you are registering, Bombay Chartered Accountants, take this, you can have multiple societies. Okay. MOA, AOA will be there. If you are registering yourself as a company, Section 8 company, you can only make books on accrual basis. But if you are registering books of accounts, can only be on accrual basis. But if it is a trust or society, it depends on the laws of that state. So it may be cash or accrual basis. It may be cash or on accrual basis. It depends on the state. It can even be sometimes many trusts have their books written in local language. Okay. So it allows people to function as per the given instead of a centralized law that it should be in English. Okay. So there are many ways in which local laws help. and state laws also help for society and trust to function. So the books may or may not be in accrual basis. It can be in cash basis or accrual basis. Now, suppose I am registering a trust. Okay, let's imagine I'm registering a trust. I am receiving donations. Okay, let's say I'm receiving donations. Now, if I don't want that donation to become taxable, very simple, na? I don't want that donation to become taxable. I don't want to pay high amount of tax on it. I want to get exemption. So you have to register under Income Tax Act separately. So is it enough if we register under only Trust Act or Society Act or Companies Act? Is it enough to create? Is it enough? No. So we have to do additional registration under Income Tax Act, and usually you have to renew this registration regularly. Okay? You have to renew also this registration regularly. Next, one more thing. So if I want to receive Income Tax Act 1961, yeah. Navneet, what is the question? Why you have put question mark? There are multiple sections. Yeah, primary is 12A, but you'll study in detail in Income Tax Act. There are various forms, 10A, 10B. You will study about that. It is a section in which you can get exemption. Exemption as a trust, as an NGO. Otherwise, you will have to pay 30 plus surcharge tax if you don't get that exemption. Okay. If your NGO is not registered, you'll have to pay tax. Okay. So what if I want to get foreign funding? Then you cannot just get foreign funding just because you are registered under Income Tax Act. Then you have to do additional thing, Foreign Contribution Regulation Act 2010. So if you want to get foreign funding, you need to do additional work. Foreign Contribution Regulation Act. And this act is very, very strict. It's very difficult for NGOs to first get the registration and then to keep the registration and do the renewal on time. So it's quite an important act. Everyone is clear? Okay. So till now, I have done this much for you. Okay, pay attention. NGOs are not for profit, which raise funds for various social objectives like education, medical facility, economic assistance, disasters, etc. NGOs can be religious organizations, voluntary health and welfare, charitable organization, hospitals, old age, even research foundations are NGO. Okay. If foreign funding is involved, audit would be strict. Yes, extremely strict. There are a lot of rules. Many people lose their registration. Many people lose their registration of FCRA because it is directly handled by Ministry of Home Affairs. You know, even the reports are submitted. If your organization is registered under CARO, even the reports are submitted to Ministry of Home Affairs. Do you understand? So the idea behind this is that government wants to keep a control and watch on other countries giving money and whether it can cause any trouble or instability in our country. Is that clear? If other countries are funding any NGO which can cause any instability or problems in our country. Okay. And that is why Ministry of Home Affairs is involved. Okay. There are some examples. Godhuli, some examples, nothing else in this. Now just pay attention. What all you need to remember? Society Registration Act, Indian Trust Act 1882, or Section 8 of Companies Act. Okay. There is no warrant of mandatory registration. There is nowhere written that to run an NGO, you need to have a mandatory registration. There is no such written rule. Okay. But if you want to have any immovable property of even more than 100 rupees, then you need to get it registered. You don't have to remember this Transfer of Property Act and all that. You don't need to remember. Okay. Come here. Some states like Maharashtra and Gujarat, where Public Trust Act have been passed, such as Bombay Public Trust Act. So you have to get registered under this act, not Indian Trust Act. Okay. Then other than that, you might have to get registration under Income Tax Act and Foreign Contribution Regulation Act. If you are registered under Companies Act, you must maintain your books of accounts on accrual basis and as per provisions of 128. And if you are not registered under a Companies Act, you are allowed to maintain books on either accrual or cash basis. Anything left? I've covered everything. Everything is covered. Okay? Everything is covered here in the small flowchart. Okay, can I move ahead? FEMA is involved as a secondary thing, not primary. Not as something you register yourself in. Okay? You register yourself in FCRA. Okay, now we'll move to the next topic. This chart is a blackboard that I'm just explaining you things in. If you don't want, everything is here in your book. I'm not telling you, teaching you anything extra. This is a blackboard like you study in your schools. Not everything you have to think this is notes. Okay? You want to use it, you can use it. You want to take screenshot, I'll give you this whole thing you can take as a screenshot. But it has everything. The past 2-3 paragraphs from the book, it has all the important points. Okay? Done? Can I move ahead? Okay. Thank you. Now let's come to sources and applications of funds. First, let's come to sources. One second, students. Some technical issue. Oh, okay. Here it's working. Some problem over there. I'll just use the space here. Okay. Sources of funds. Let's first talk about sources. Yes, basically, Pooja, remember this as a trick. If you are involving even any money or any immovable property that requires one person to transfer the name in front of you in your NGO's name, it means there needs to be an account in which they can transfer. There needs to be a PAN number. The entity needs to exist. And for that existence, you will have to get it registered. Just remember it like that, okay? Ma'am, provide screenshot of local bodies. Here. Take screenshot. Or should I do in 2 parts? You can do like this. First, you can do this much, I think. And part 1. Part 2. Done? Harsh, finished? Harsh, please let me know quickly. Yes, no. Thank you, ma'am. Done. Okay. Okay. Now let me proceed. Sources. First thing. I don't know what is happening. Give me just 1 second, please. First, corpus. Everyone pay attention. Corpus contribution. I think everything is smooth now. Hopefully, there's not a glitch. So, first is corpus contribution. Pay attention. It means contribution contribution to capital. Pay attention here. What does contribution to capital means? So if you are an NGO and you're building the base, capital base, and you don't want, I want to contribute to your NGO, but I don't want it to be spent in regular expenses like electricity, salary, and all that. So I can tell as a donor, I can tell that I am giving you this donation, but it shall form part of your corpus. And if a donation is given from the perspective of being made part of corpus, it is exempted under section 11, 1D of Income Tax Act 1961. Pay attention again. If any money has been donated from the perspective to make it a part of capital, then it is exempted under section 11, subsection 1, clause D of Income Tax Act 1961. But it should specifically mention, direct to be made in corpus, which means in my donation letter, it should specifically mention that I am giving this money for the purpose of corpus only. So if you are having such proof, then it is exempted under section 11, subsection 1, clause D of Income Tax Act 1961. Anil has messaged, ma'am, most of the trusts are accepting donations from public. Ma'am, audit of trust has to be very dynamic, right? Compared to general audits. Your perspective is different, Anil. So if I am running a business, the auditor's perspective is to check profit. But when you are auditing a trust, your perspective is to check that donations are used for correct purpose. So there's a little bit of proprietyness involved. Is that clear, Anil? So when you are doing trust audits, our perspective changes. We are no more concerned only about profit and loss, but we are more concerned about how the money that has been collected is spent, with how much carefulness it has been spent, in what correct direction it has been spent. So that becomes the perspective of the auditor, that this is what they want to check. All right. So one of the first sources of funds is corpus fund contributions that are made to the NGO that are exempted under section 11(1)(d) of Income Tax Act, but it should specifically mention that they are made for the purpose of corpus. Second, Revolving fund contribution. Now pay attention. These are also money that are given in the form of donations to the company, sorry, to the NGO, with the perspective that they are given as loans that are temporary and received back. Okay? And are received back. You must have heard something about Teachers Credit Society. So these public school teachers and all, they create this Teachers Credit Society in which what happens? They have all have contributed, let's say, 20,000 rupees. And there are 100 teachers. So they have created a corpus, they have created a capital. Now, if any teacher needs small loans, temporary loans, there's a wedding at home, or there's some emergency hospitalization at home. So the credit society gives money to them, collects a small amount of interest and gets the money back. So money does not get spent. Money is rotated. Money is what? Rotated. So that is another way in which NGOs run. That is called as revolving fund contributions. Everyone clear what is revolving fund? Then next is specific purpose. Specific purpose contribution, which means someone comes to me and says, I want to build 100 toilets in this small village. So I am giving money specially to create only toilets. So that is called as specific fund contribution. Then another kind of contribution is contributions in kind. What is contributions in kind? What does it mean, students? Quickly tell me. You all know this. Contributions in kind. What is contributions in kind? Things. You are giving furniture, you are giving land, you are giving school supplies, you are giving ration, you are giving vehicle. So that is called as contribute. Food, clothes, books. Yes. So these are the different ways in which you can receive things. So the first is corpus fund contribution. Next is revolving fund contribution. Then specific purpose contributions, and next is contributions in kind. Any doubt till now? Any doubt till now? That's it. This we completed this topic from the book called as sources of funds. Sources of funds is done. Okay? Sources of funds is done. Okay. So just see from the book here. Sources of funds are mainly grants, donation, fundraising programs. This we'll see in detail. But just see this, underline whatever I'm telling you. Received in the nature of promoters' contribution are shown as capital receipts. Underline it. Shown as capital receipts and shown as liabilities in balance sheet. They enter either in the form of corpus or in the form of revolving fund. A contribution made towards the capital or corpus is known as corpus contribution. Donors are required to specify when they are giving corpus contribution. Under section 11(1)(d), 11 subsection 1 clause D of income tax states that income in the form of voluntary contribution made with a specific direction that they shall form part of corpus shall not be included in the computation of total income. Remember this. Section 11(1)(d). Okay? Section 11(1)(d). Next. The objective of a contribution or grant towards revolving fund is to rotate, underline the word rotate, by giving temporary loans. You can give the money to other NGOs or beneficiaries, and then you recover the loan, and then you again give temporary loan. This is called as revolving fund. If you earn any money, you again put it back in the fund. It can be either added back to the fund or it can be credited. It depends on your accounting policy and it depends on the restrictions of the donor. Okay. Depends on the authority providing the contribution or by the rules and regulations of your own NGO. So whether you want to whether you want to add the interest back to the fund or whether you'll put it as income, it depends on your own rules and regulations or the directions of the authority. Next, if the donations are given for specific purpose only, then you should only accept. The primary condition is that NGO should accept them to purchase or construct as required. So I told you the toilets example. Then you can receive in kind also, like land, building, vehicle, equipments, etc. Or you can receive things like books, food, material, clothes, etc. Done? Any doubt till now? Quickly tell me, what are the sources of funds? First, corpus fund contribution. Second, revolving fund contribution. Third, specific contributions. And fourth, contributions in kind. Finished? Easy? Anything hard we are studying? Do you think we are studying something very complicated? Do you think we are studying anything that is complicated? No. No. Okay. Very easy things we are studying. Now just underline a few things. If you are an NGO registered as Society Registration Act or as a trust, the management of the society or the trust appoints the auditor. So if you're running a society or a trust, your own management will appoint the auditor. And if you are an NGO registered under Section 8 of the Companies Act, you are appointed by the members of the company. Okay, you are appointed auditor by the member of the company. Now, this special thing you remember. Some acts like FCRA, okay, FCRA, Income Tax Act, requires you to do the audit regularly. And if you don't do so, there could be forfeiture of certain exemptions and benefits. So here, underline this for MCQ. Write down your MCQ. What do you have to underline? Under Foreign Contribution Regulation Act, there is a prescribed format and you have to furnish it to Ministry of Home Affairs within 60 days from the closure of financial year, that is by May 30. Please mark this for MCQ. If you are registered under FCRA and then you have to furnish a report to the Ministry of Home Affairs within 60 days from the closure of the financial year. Everyone clear? Okay, next. Now, let's do it differently, okay? Let's see if my pen works properly. I don't know what is the problem. Okay. Now, provisions related to audit. Pay attention. How do we plan an audit? Working perfectly fine now. I don't know what problem it had last time. Planning an audit, okay? Pay attention. We'll just take a 5-minute break. I'll just come back, okay? Tech support, can we do 5-minute break right now? Tech support? Yeah, 5 minutes break, please. Yeah. Okay, students. So let's come to planning of an audit. What did we see before? That what are the sources of funds for a NGO? Okay. Now I want to do audit planning. Just very practically, let's see. Forget your book for a minute. Oh, forget it completely. I want to practically. I have been appointed. Let's say auditor of Gunj. It's a very famous NGO doing very good job. So suppose I'm auditor of Gunj, but now Pooja is in my team and Kuldeep is in my team. Pooja and Kuldeep, can I just send you off and you can start doing vouchers? Or do you first need to understand Gunj first? Can you just start doing audit, or you first need to understand what Gunj is, what work it does? You need to prep, you need to do some work before you can jump right into the books, right? So this is what we are talking about. That if we are doing audit of an NGO, if we are doing audit of an NGO, what do we need to do first? So forget your book, think practically. I will acquire knowledge, ma'am. Okay. What knowledge you will acquire, beta? The first thing is I want to understand what does NGO do? What is its vision? What is its mission? What is the objective? I want to understand NGO first. Okay, I've told you this, that NGO works in collecting scraps and proceeds out of it. Okay. But ma'am, what is it registered as? Is it registered as a trust? Is it registered as a society? Is it registered as a company? So I will see what are the relevant statutes applicable. Ma'am, is it also registered as FCRA? Then I have to study FCRA also. Okay, so we have to get knowledge of all the statutes under which it is registered. Okay, if it is registered under Companies Act, then I have to study MOA, AOA. If it is registered as a trust, I have to study trust deed. So I need to read the trust deed fully. If it is registered as a society, I have to study rules and regulations, madam. First, you get me all these documents. Don't send me to the client. First, give me all this. Okay, beta. Got the knowledge of this also. Okay. Okay, ma'am, I have understood. Gunj is this. It is registered as trust. I have studied the trust deed. But how does the organization function? How many trustees it has? What is the structure? Do they work formally? Whether there is proper hierarchy? So let me understand the structure of the organization. Then what are the different projects and programs that are currently running? What programs they did in the past? I will study their documents, what all programs they have done in the past. Who are their primary funders? What grants they have? All this you will study. And this is primary work. Everyone, this much is clear. What all knowledge will you acquire? You'll ask me details. Ma'am, what does Gunj do? What statute under which it is registered? Okay, as per the statute, I'll read their primary document like MOA, AOA, trust deed. And then I'll see what kind of project they are doing. What is the organization structure? Who do I have to meet? Who is in the accounts department? How many people are there in the accounts department? How are they collecting cash? Are they doing cash donation? They're not doing cash. So understand how they function, how they work. Okay, ma'am, I have done all this. Now I have to study some things. Or you can write the word here, inspect. What all will I inspect? Okay, I've studied everything. Now what will I inspect? I will inspect the accounting system. Very simple. Do you remember internal control system? I will understand their internal control systems. So this part you did was actually what? Essay number 315. Do you remember essay number 315? Do you remember essay number 315? Identifying and assessing the risk of material misstatement through understanding the entity and its environment. Okay? Identifying and assessing the risk of material misstatement through understanding the entity and its environment. Okay. Now I'm checking their internal control systems. their accounting systems, everything I'm checking. And plus I'm checking their minutes so that I can see what are the major expenditures and all that has happened. According to this, then I will decide materiality. So after 315, essay number 320. What are you doing after essay 315? Essay number 320 is what? Materiality. Materiality. Okay. Then, okay, I have done the materiality. Okay, ma'am, I've understood everything. I've made a very nice plan, ma'am. I've understood Goonj. I've understood their structure. I've understood their accounting system. These are the areas of weakness. These are the material areas. I will work on these major areas, ma'am. Okay, beta, you have created a good plan. Ma'am, do I need to give them report every day or once in a week? Or do I need to give you report once in a month? Or can I just give a final report? No, no, no. You give me a report every 3 days. So next, what are we deciding on? Nature and timing of reports. Nature and timing of reports. Okay. So, Pooja, have you understood the Goonj perfectly or do you need help of someone? So, whether an expert is needed. Whether an expert is needed. And overall, check previous year audit report. And what we have done now is actually this big answer that you can see. Can you see this big answer of 10 points? Can you see in your book this big answer of 10 points? Planning and audit of an NGO. This is here. This is very easy if we do it very, very logically. 4 points so you'll learn easily. Knowledge. What knowledge of NGO's work, mission, vision, objective, or the relevant statutes applicable on the NGO. Studying and obtaining knowledge of their memorandum of association, articles of association, trust deed, and studying their structure, projects, schemes, funders, grants, etc. Then all this we have studied. Now come to the audit part. Then we will study their accounting system, internal control system, read minutes book, then decide materiality, then reporting, whether an audit expert is needed, and study previous year's audit report. Everyone clear? Here we finish 10 points. Can you see? Very easy. Can you remember? हो जाएगा याद? लिख पाओगे? You'll be able to write. If you're asked in exam, if you're asked for 4 marks, how many points will you write? Even if you're asked for 4 marks, how many points you will write? All 10. Not 4 points. Because all 10 things are required to do the planning. Do you think you can finish planning in just knowledge? No, we need to do all these 10 things to finish planning. And that is why we need to write all the 10 points. Let's see the book now. Do you want to take a screenshot of that? You can take the screenshot. Done. Screenshot. Can I move to the main book? Okay. Come here. Planning and audit of NGO. Pay attention. Knowledge of NGO's work, vision, mission, operations, environment. So knowledge first of NGO's work. Then updating knowledge on relevant statutes, which means any recent amendments, circulars, decisions, Foreign Contribution Act, Society Registration Act, Income Tax Act. Study all that. Next, study the form of the organization and its MOA, AOA, rules and regulations, etc. Then reviewing organization's chart, financial and administrative manuals, project and program guidelines, funding agencies, requirements and formats, budgets, etc. Then examine minutes so that you can know major decisions that have been taken. Then study the accounting system, procedures, internal controls, internal checks. Then set up materiality levels for audit purposes. Then nature and timing of reports, involvement of experts and the reports, and reviewing previous year's audit report. Finished? Are we done with this answer? Once again, I'm repeating. You also don't see the book. Keep your book away. Look at me. We'll try to say the answer together. I can't hear you, but you speak with me. Okay? Planning and audit of an NGO. The first thing, acquire knowledge. Knowledge of what? NGO's work, vision, mission, their strategies, everything. Second, get all the knowledge about statutes, recent amendments, latest acts, everything you study. Third is get all the details of MOA, AOA, rules and regulations, trust deeds, study all that. Next, understand the organization structure, understand their funding agencies, understand details about their programs and schemes that they are running. After that, you come to the accounting part, which means we'll check their accounting system, their internal control systems, and their financial control system and all we'll check. According to that, we'll also check the minutes of the book so that we can know what major decisions have been taken during the year. After that, we check the materiality, which things are important, then what to report, whether experts need to be involved, and lastly, whether previous audit report, what does it say about all these things? Finished? Were you able to say the answer? How many of you were able to say the answer without looking? How many of you were able to say the answer without looking? Quickly tell me. Okay. No one. Do you want to do once again or can I move to next topic? One person did, Kuldeep. Can I move to next topic? Or do you want to do once more? Again, one more time. Okay, Antanu, pay attention. Everyone pay attention. बिना देखे book में बोलना है answer. Okay? You don't have to look into the book. Say it with me. Okay? First thing, knowledge. What knowledge about NGOs work? I am saying in one word now. About NGOs work. Second, about statutes. Third, about MOA, AOA, rules and regulations. Fourth thing is about organization structure, funding agencies, etc. After that, we have to check their accounting system, internal control systems, etc. Then plus we have to check the minutes book. Then we have to check the materiality, then types of reporting and whether any expert is needed. And we have to check all of this in previous audit report and we have to study the audit report also. Finished. That's it. 10 points done. Now, how many of you are able to say, even if 80%, 70, 80%? Ashlesha did, yes, I said, ma'am. Adil, yes, ma'am. Now I am able to say, ma'am, good. Archana also, yes, good. All right. So if you do that at home also, that's why I'm saying, when you study audit, don't study it silently. Don't study it that you're just reading it like a book or a newspaper. As much as you say it out loud, it's very good. Even you can make study groups, find 2-3 friends, study audit together, say it to each other out loud. Okay? So the more you say it out loud and repeat it, you will remember for a longer period of time. Okay? But of course, you have to do revision. Now let's come to the next answer, audit program. So now the next question is audit program, students. So please remember difference. Audit program is different than audit planning. So if in exam they ask you audit program of NGO, the answer is different. If they ask you audit planning of an NGO, the answer is different. Planning is different. Planning is all that knowledge and all. Now everything is done. Now we are doing the audit. So we are creating an audit program. So before I show you this answer, pay attention here. Pay attention here. I want all of you to first understand a few words that I'm teaching you, okay? Before we look at the answer. All of you understand corpus fund now, right? So I want to teach you one more word called as earmarked funds. Earmarked funds. Earmarked funds, which means funds set aside for specific purpose, which can be long term, which means I have this vision that I want to create a hospital. Do you think hospital I can get all the funding in 1 year? And or do I wait that once I received all the funding, then only I'll start making the hospital? What happens as and when you start receiving funding? Okay, I'll create the first floor and start the basic clinic. Okay, now I have enough money, I'll create the second floor. So there are some funds that you receive only for specific purpose. You will not use the money for any other thing. Is that clear? So when you receive money for a specific purpose, that is called as earmarked funds. Everyone clear? Now the special thing about earmarked funds is that many times they can be in very large number. So I want to start a hospital, and for that I want to buy a land. But for buying land, I need to have at least 3 crore rupees. This year I was able to get 1 crore. Next year I'm expecting to get again 1 crore. Before that I can't start the work because I need to purchase the land. So till that time that money is idle. Can we use that money? Can I use this 1 crore rupees for any other thing? Can I use this 1 crore? But sometimes you have this money, you don't want to keep it idle, so you put it in an FD or you put it somewhere safe. So because of that, you might earn something on it. You might earn interest. You might earn interest. Do you think that interest we can use for some other purpose, or it gets added back to the earmarked funds only? Do you think that interest gets added back to the earmarked funds? Add back. So that is what one thing that auditor needs to check. Is that clear? So I'm just explaining you a few words that are used in the book. Next thing I want you to remember is establishment expenses. Establishment expenses means day-to-day expenses, which means day-to-day expenses of running an NGO. That is called as establishment expenses. Next, I want to make you know this word, donations, grant, and legacy. Can anyone tell me difference between donations, grants, and legacies? What is the difference between donation, grants, or legacies? Anyone? Give it a try. I'm ready to wait for a minute. Legacy in inheritance. Okay. Grants are like subsidies. Okay. Grants are usually by government. Correct. Good, Kuldeep. Tanu also good. Okay. Good. Just small differences I'll tell you. Donations are usually unconditional. Means revocation is not there, but grants can be revoked. Usually, all your points are correct, that donations are usually from individuals and grants are usually from institutions or government, right? But usually donations once given, no one can ask you back. But can grant, if it is given to you, it is usually given that you fulfill certain conditions. And if not, the grant can be revoked like a subsidy. Okay. Legacies is usually inheritance by will due to death. So if someone has died and left something for you, that is called as legacy donation. Okay. So there are three ways: donations, grants, or legacies. Just remember, these are just general words I'm making you aware that can be used in charitable institution, NGO questions. Okay. Now let's come to the main answer: audit program. Audit program. Okay. Let's imagine what are the main assets. Okay, main liabilities. Sorry, what are the main liabilities? Balance sheet. Imagine a balance sheet and a P&L. Whenever you have to make an audit program, imagine a balance sheet and a P&L and try to remember the most important items. So if I have to create audit program of an NGO, the first thing I will check is corpus funds. Keep imagining the liability side of the balance sheet. The first, let's imagine liabilities side of balance sheet. Okay. Corpus funds. All reserves and surplus we have to check. Then earmarked funds. Okay. And if you have taken any loans. Now let's imagine asset side of balance sheet. Asset side of balance sheet, you try to imagine. What can be there? There can be fixed assets. There can be inventory. Right or no? There can be cash. There can be bank balance. There can be investments. Any normal balance sheets, imagine. These liability side, what will be the major things? Corpus funds, reserves, earmarked funds, any loans given. What will asset side usually have? Fixed asset, inventory, cash, bank balance, investments. Now, imagine P&L. Okay? P&L side. What will be the major thing? Income we have already included because when we check all this, automatically income is checked. Okay? So in P&L, what all will be there? Of course, income will be there. Income, what different sources of income can be there? What different sources can be there? Donations, grants, interest, correct? Yes, yes. It's usually called receipt and expenditure, but just to give you an overall idea. Okay. Sorry. Any interests and dividends on investments? What else can be sources of income? Receipts, sorry. What else can be sources of receipts? Can some NGO also sell things? Have you heard Arijit Singh playing live to collect money for the tsunami victims or for the fire accident victims? We are doing a fundraising program, ticket sales. So they are called as fundraising programs. Fundraising programs. So other than that, there can be membership fees. How can there be membership fees? So many NGOs can have a charity match. Very good. Membership fees can be there in terms of research organizations and these societies. So someone mentioned about Bombay Chartered Association, something, right? So they can have something called as membership fees. So NGOs can even have membership fees. They can have subscriptions. What is subscriptions? I told you that Pooja or Adil started this Hindi poetry, Hindi Sahitya Lovers Society. So they give magazines every month. Can they take subscription fees for the magazine? Can they take subscription fees for the magazine? Yes. So income side, all this can be the sources of income for an NGO. I used to know one society for mentally disabled. You know, they used to make paper bags. They used to make diyas in Diwali. They used to make files and folders, and they used to sell and earn income. So different fundraising can be done, different membership can be done, different subscriptions can be done. So income. So we imagine balance sheet side. Now we are imagining P&L side. Okay. That is CSR from companies will come under donations and grants. Okay. And then expenses. What are the major expenses? What are the major expenses for running any projects and programs and for running the NGO? So till now we have not seen book. We are just doing the work by logic. So if I want to create an audit program, what is the trick I have told you? Imagine a balance sheet or a P&L. Imagine what will be on the liability side. What will be on the liability side? Corpus funds, reserves, earmarked funds, loans. What will be on the asset side? Fixed assets, inventory, cash, bank balance, investments. What will be income? Donations, grants, interest, dividends, fundraising programs, membership fees, subscriptions. And what can be major expenses? Projects, programs, and establishment expenses. Now you see the book. Such a big answer, students get afraid and they leave. Can you see such a big answer? But we have to verify corpus fund, reserves, earmarked funds. This I'll tell you later. One point is left. I know that I'll tell you later. Loans, fixed assets, investments, cash in hand, bank balance, inventory, program and project expenses, establishment expenses, income, contributions and grants, receipts from fundraising, membership fees, subscription fees, interest and dividend. 2 pages answer. Do you think it's possible to learn this? It's an answer of 2 pages. But do you think it's possible to learn this logically? Now does it feel very heavy, impossible to learn? Possible to learn, right? Easy ho gaya. Yes. So the trick to making a good audit program is to be able to imagine their financial statements. We will do this for a lot of things in this chapter. Okay. So audit program, what all we have to check? Let's see the book now. The contributions and grants received towards corpus can be checked with letters of the donors. Interest income can be checked with investment and physical investments in hand. Reserves, check proper transfers from projects with donors' letters and board resolutions. Properly check transfer of gross value of assets held from capital reserve to general reserve and adjustments. Earmarked funds refers to fund allocation practice in which an entity, etc., set aside a determined amount. Check requirements of donor institution, board resolution, rules and regulations. Now, this point separately you can remember. Projects and agency balances. It means vouch disbursements and expenditure as per agreement. So what does it mean? So there was once an NGO, for example, and they used to distribute, let's say, menstrual hygiene products to people. Now the NGO has gotten 3 lakh rupees in bulk from the donor. Now they have spent 1 lakh out of it, but 2 lakh is still pending as a balance. And they have told you have to distribute 2,000 menstrual hygiene kits. So for that, they are keeping some balance of that fund. So that is called as project balances, which means I have allocated 3 lakh rupees to this project. Now 2 lakhs is pending, 1 lakh is spent. So that is called as project balance. Okay. Then vouch loans with loan agreement, etc. Fixed assets, you have to check all the acquisition, sale, disposal of assets. You have to check depreciation. You have to check donors' letter if they have received. In case of immovable property, check the title deed. Investment, check investment register. If investments are there physically, check it physically. It should be in the name of the NGO. Check any investments and disinvestment. Disinvestment, if we have sold it, it should have proper approvals and cross-reference them in bank accounts for any amount of interest. Check if there is any physical cash in hand. Impressed balances, which means petty cash balances. And see if it tallies with books of accounts. Bank balance, check bank reconciliation statements. Inventory, check inventory in hand and obtain certificate from management regarding quantities. Certificate means here we are talking about written representation. Then you have to check project and program expenses. Verify agreement with donor or contributor that if they're supporting a particular program or project, what are the conditions of doing that, whether proper TDS is deducted, properly it is filed or not. An establishment means provident fund for employees, life insurance, employee state insurance, administrative expenses, they are properly done. Postage, stationery, traveling, everything is included. Everyone done? Any doubt? There's nothing much. Very easy. Okay. Now mark this as important. Mark this as important. Receipt of income. This is the most important part. Receipt of income of NGO. Okay. What are the ways to receive income? Contributions and grants. So you have to check agreements with donors, grant letters so that funds are properly accounted. If you have received any foreign contributions, see it is deposited in foreign contribution bank account under FCRA only. If you are doing any fundraising, see there is proper internal control system and who are responsible for collection. Ensure that collections are properly counted and deposited. Membership fees, check whether fees is received with membership register. Proper entrance fee, annual fee, life membership fee. Then subscriptions, if there is any subscription register. Reconcile with printing and dispatching of magazines, circulars, and periodicals. Check with subscription rate schedule. Interest and dividend, check the interest and dividend received and receivable. Is it done, everyone? Completed? Clear? Clear, ma'am? Okay. Clear. Pooja also clear? Clear. Okay. So we are done with audit of NGO topic. We'll move on to the next. Next is nothing. Next is nothing. Audit of sole trader. Sole proprietorship. Does all sole proprietorship get audited? Do all sole proprietorship get audited? No. So there is no legal obligation. There is no legal obligation. But what if my bank tells me that if you want loan, get it audited? Can I get it audited? If my bank tells me, I'll give you loan if you get it audited. Okay. So if you're required to get audited, you can do as per regulatory requirement if there is some requirement of it. That's it. It's voluntary. Who appoints auditor in a sole proprietorship firm? Who appoints auditor in a sole proprietorship firm? Who appoints auditor? Sole proprietor himself. What board? There is no board. I am running my own business alone. Proprietor only. Acha, tell me one thing. Everyone pay attention. I have a question. So, let's imagine that Navneet was auditor of Krishnalal and Sons before me, okay? My screen is getting stuck. Is it getting stuck, students? No, it's working. Okay. Okay. Just check your net, Harsh. Pay attention. Now I have a question for you all. So suppose Navneet was auditor of, let's say, MK and Sons. It's a proprietorship firm. CA Navneet was auditor. Now they want to come to me. Okay. So if they want to come to me, do I have to take permission of Navneet? Do I have to take permission of Navneet? Yes, NOC. You have studied about this already? You have studied about this? Yes. So yes, you are allowed, but you have to take NOC from the previous auditor. So same thing is applicable. If there is a change of auditor, it would be duty of the incoming auditor to communicate with the previous auditor. That's it. Okay. Now, on this consideration, it is desirable that you create a contract. Now, if we are doing sole proprietorship audit, will SA 210 be applicable? Do I need to make an engagement letter? Will 210 be applicable? Quickly tell me. You have studied SA number 210, right? So will SA number 210 be applicable? Yes. So even if you are sole proprietorship, you should have properly appointment letter in writing. There should be proper scope of work so that there is no misunderstanding. Okay. So that's it. There's nothing in this. Not very important topic. Okay. Now come to audit of firm. Before we do audit of firm, let's do something else. Everyone, come to audit of LLP. Pay attention, everyone. Audit of LLP. We'll be doing audit of LLP now. Audit of LLP. Everyone knows what is an LLP? What is an LLP? Limited Liability Partnership. There are two governing laws. LLP Act 2008 and LLP Rules 2009. LLP Act 2008 and LLP Rules 2009. This is a very, very important topic. Audit of LLP. This is very, very important topic of this chapter, audit of LLP. Very small, but very scoring. Okay. Books of accounts can be on cash or accrual basis, but it should be in double entry system. Cash or accrual basis, but double entry system. What is the content of the books? Which means how do you prepare books? All the money received and spent should be shown. All the assets and liabilities should be clear. Statement of goods purchased, inventory, WIP, finished goods, cost of goods sold should be there, and any other particulars which the partner may decide. So when you maintain books of accounts, what it should include? It should include all the money you have received and spent. It should include all assets and liabilities. It should include all basic cost records like cost of goods purchased, inventory, WIP, cost of goods sold, and any other particulars which partners may decide. Now let's come to audit rule. Rule 24 of LLP Rules 2009. Firstly, which kind of companies are auditable? So if I am normal company, I'm talking about under Companies Act. If I am a loss-making company, do I need to get audited? If I am loss-making company, do I need to get audited? What if I have just incorporated my company, but there are no operations in my company? Nothing is there. No sales, no purchase, nothing is there. Do I still need to get audited? There are no operations in my company. No, you have to get audited. Even if there is nothing, even if it's dormant, even if it's new, even if it's loss making, audit is mandatory without any conditions. Which means if you are a company incorporated under Companies Act, you have to get audited. Is that clear to everyone? If you are a company incorporated under Companies Act, yes, every company has to get audited. Even if Navneet, you have done 10 rupees of work in your company, still you need to get audited. Every company needs to get audited, but the same condition is not applicable on LLP. Okay? Not every LLP gets audited. So where is it written? Rule 24. Rule 24 of LLP rule said that if your turnover does not exceed in any financial year 40 lakhs and contribution does not exceed 25 lakhs, then you are not required to get accounts audited. Okay, if anyone exceeds, you have to get audited. But if your turnover does not exceed 40 lakhs or contribution does not exceed 25 lakhs, you don't have to get audited. But if you want to get voluntary audit done, you can do it as per the rules. If you want to get voluntary audit done, you can get it done as per the rules. Now, this very, very important, students. Very, very important. Form 11 and Form 8. Contributions means contribution to capital. Okay, Navneet? Contribution to capital. So there are two types of forms. Form 11 and Form 8. Form 11 is for annual return. Every LLP needs to file an annual return within 60 days from the closure of financial year. Remember this. Form 11 got annual return. Form 11 is annual return. In how many days? 60 days from the closure of the financial year. That is 30th May, correct. Next is Form 8. Form 8 is Statement of Account and Solvency. That you have to file within 30 days from the end of 6 months. 6 months ends at 30th September. 30 days from that means by 30th October, you have to file Statement of Account and Solvency. So again, very, very, very important this part. Form 11 is annual return with ROC 60 days from the closure of financial year. And Form 8 is Statement of Account and Solvency within 30 days from the end of 6 months of financial year. ऐसे याद रखो. Name बड़ा, conditions बड़ी. Small name, small condition. So annual return की condition 60 days. नाम बड़ा है Statement of Account and Solvency, but within 30 days from the end of 6 months of financial year. नाम बड़ा है पर अकाउंट फॉर्म नंबर छोटा है और इसमें नाम छोटा है but फॉर्म नंबर बड़ा है. Again, I'm repeating in English. This is just a silly trick, but it works so well, you'll remember it. Okay? Small name, annual return. Small condition, 60 days from the closure of year. Big name, Statement of Account and Solvency. Big condition, within 30 days from the end of 6 months of financial year. Big name, but small form number. And small name, but larger form number 11. Can you remember it? Can you remember it now? Very silly, I know, but it works. Okay, it works. That is how I memorized it. So, annual return how many days? Small name. So, 60 days from the close of financial year. Statement of Account and Solvency, big name. So, end of 30 days from the end of 6 months of the financial year. Within 30 days from the end of financial year. And Statement of Account and Solvency, big name, form number small, Form 8. Annual return small name, form number big, form 11. Everyone clear? This is very useful in MCQs. Okay, very useful in MCQs. Now let's talk about power of registrar. What is the power of registrar? No, you can't write 30th May and 30th October. No. You have to write the way I am telling you. We are studying law right now. Okay. All this we are studying as per law. So that is why we have to follow the language of the law. Forget you are in auditing class for some time. We are doing law class. Okay. Now, what power does registrar have? Registrar always have two main power, students, anywhere. They can ask you for details. They can ask you to come. Just remember like this. Any registrar will have two main powers. They can ask you to send some information. They can ask you yourself to come. Like this, you remember. So to obtain such information as necessary from any partner or employee, and power to summon. Summon means power to demand your physical presence if information is not furnished or not satisfied with the information given. Okay. So what power does registrar have? To obtain information as necessary and to power to summon. Okay. Now next comes to inspection. Again, inspection mark is important. Inspection mark is important. Following document is available to be inspected by any person. Any person means today, now. Harsh can go on the MCA website and get information about any LLP and download it. Do you know that? Did you know that? He just has to pay 50 rupees. Everyone clear? So, what documents can any person access? Remember this, any person. Not necessarily a partner, any person can access. What all you can access? Incorporation document, name of partners, any changes in it, statement of account and solvency, annual return. Is that clear? These documents anyone can access about an LLP. Incorporation document, name of partners and changes if any made, statement of account and solvency, and annual return. दो नाम तो वही हो गए जो अभी हमने पढ़े. Form 8, Form 11. Quickly tell me इसमें कौन सा form, which one is Form 8, which one is Form 11? Quickly tell me. Which one is Form 8, which one is Form 11? Quickly tell me. Annual return 11. Yes. बड़ा नाम. Statement of account and solvency. Big name. Form 8. Okay. याद रहेगा, you'll remember. If you want certified copy or extract, you can pay ₹5 per page. That's it. So whatever we are studying today, students, it's not hard, but you just have to make per page. Yes, Navneet, per page. Registrar. You have to pay online only. So if you want to download certified copy, you have to pay to registrar online only on the website, MCA website. Okay. So whatever we are studying today is not hard. The trick is how to remember it. That is where we have to put effort. It's not difficult, but we have to make some tricks so that we can memorize it and it retains in our brain. Next, what happens if you are late filing the document? If you're filing up to 300 days late, if you're filing up to 300 days late, you can file with additional fees and no prosecution against you. Prosecution means no criminal or no legal case will be brought against you. But if there is delay of 300 days or more, then you can file with additional fees, but registrar can prosecute you. So what is the point? Late filing of document, up to 300 days late filing with additional fees and no prosecution against you. And if the delay is of 300 days or more, additional fees plus liable to be prosecuted. Everyone clear? Next, appointment of auditor. Appointment of auditor. Who can appoint? Designated partners can appoint you. When can they appoint you? Do you remember first auditor and subsequent auditor? Do you remember first auditor and subsequent auditor? Everyone knows. We are all on the same page. First auditor is the auditor appointed in the year of incorporation, the first year of audit. And any auditor after first auditor is called as subsequent auditor. So the first auditor can be appointed at any time, but before the end of the first financial year, which means, suppose the financial year is ending on 31/3/2025. Can I appoint the auditor even on 30th? Can I appoint the auditor even on 30th March? Can I appoint the first auditor even on 30th March? Before the end. So can I appoint? Yes. So any time for first year, first financial year, but before the end of first financial year. Next, if it is other than first financial year, at least 30 days prior to the end of each financial year. Okay? At least 30 days prior to the end of each financial year. Then they can also fill up casual vacancy. Casual vacancy can happen due to incapacity, due to resignation, due to disqualification. Okay? But if there is casual vacancy due to removal of auditor, then also you can. Okay? So, this usually appointment is done by designated partners. Partners can also appoint if designated partners fail. 1st March, nahi beta. Financial year is 31st March. Okay? 31st March, before 31st March. Okay? Before 31st March. Which one are you asking about? First point or second point? Here you are asking or this you are asking? After first. Oh, okay. So here you are asking 30 days prior to the end, which means 1st March or before. 1st March or before. Then that's correct. Okay. Now, advantages, need, and purpose of audit. If 5 of you are running an LLP, what will happen if you are not getting audit done? There can be disputes. Oh, this much profit is it showing? Why are you showing so less profit? I'm just a sleeping partner, so you are cheating me. These disputes can happen. But if it's audited, everyone will keep their mouth shut. If you want to get a new admission of a partner, if someone wants to retire, goodwill calculation becomes easy because accounts are properly audited. Improvement can happen in the way you work. If there is an auditor who can do your work verification and tell you suggestions how to do better. Then if you want to get money from banks, it becomes easier to get money from the banks if you have what? If you have audit report. It is easy to detect fraud and error if you have audit report. So first, let's think about advantages to partner. They can help in settling of disputes. They can help in settling of accounts. See, help in settling of disputes, settling of disputes and settling of accounts. Accounts when admission, death, retirement, insolvency, etc. Then it can help management in improving themselves. How can they improve? Because they can detect fraud and error. And it can help them get loans from banks and financial institutions. That's it. These are the advantages, need of audit, purpose of audit in LLP. Okay, in LLP. Okay. Now comes the main thing. Auditor's duty. Now, no one will look at the book. I am asking you a question. All of you will answer that question. My question is, if there is an LLP agreement in front of you, what all things will you see in it? As an auditor, what all things will you note down? One point everyone write. An LLP agreement is in front of you. What all points will you notice? What all points will you note down for your use? In an LLP agreement, imagine a partnership deed. Same thing. Profit ratio. Correct, Anu. We'll note down profit ratio. What else? How many partners are there? Very good. Capital contributed by partners. Very good. Who are the partners and designated partners? Correct. LLP agreement में क्या क्या देखेंगे? Agreement. What else? Imagine your partnership deed. Interest on capital, interest on borrowings, salary that can be given to partners. Very good. How much liabilities can be there? Duration of the LLP. Duration of the LLP. How many loans can be taken? Yes or no? All these things will note down in an LLP agreement. Purpose and objective. Good. Now come here to the book. Interest on capital. Very good. So what are the auditor's duty? First is get definitive instructions in writing. Get everything in writing. Then auditor should mention records are correct and reliable. He has obtained all information and explanation necessary, and whether there was any restriction on the auditor. These are general points, but come to this. Read LLP agreement and note down the following. Nature of business, you already told me. Amount of capital by each partner, you already told me. Interest on capital, you already told me. Duration, I told you. Drawings allowed. Salaries, you already told me. Borrowing powers of LLP. Rights and duties of partner, you already told me. Method of settlement of admission and retirement. Any loans, profit sharing ratio. You already told the whole answer, students. Did you study it before? Did you study this before? Audit program of LLP. Auditor's duty regarding. No. But were you able to tell the answer on your own? The key is, the trick is, the secret is that now you know enough to actually audit something. Understood? Because this chapter we are actually doing the audit. Common sense. So this big answer becomes a small answer. Easy answer. So what are the auditor's duty regarding audit of LLP? Get definitive instructions in writing. Mention whether records are correct and reliable. Mention whether obtained all information and explanation necessary. Whether any restrictions are there on the auditor during audit. Read LLP agreement and note the following. Nature and business of LLP, amount of capital, interest on capital, duration of partnership, drawings allowed, salaries and commission, borrowing power of LLP, rights and duties of partner, method of settlement during admission and retirement, etc. Any loans advanced by partners, profit sharing ratio. Everyone clear? That's it. Here we are done with audit of LLP. Very easy topic. Any doubt? But very scoring topic. Okay, very scoring topic. So if you want to take screenshot, I am holding the page for 2-3 seconds. Screenshot number 1. Quickly take the screenshot. Screenshot number 1. Then screenshot number 2. Screenshot number 2. Then screenshot number 3. Screenshot number 3. Then screenshot number 4. Screenshot number 4. And last, screenshot number 5. Done, everyone? All right. Done. Okay. Very happy. All done. So let's go back to the book. So audit of firm will do now, but I have already finished audit of LLP here. I've covered everything in the notes. Nothing is pending, okay? I've covered everything in the notes. Nothing is pending. Okay. Now let's come to the last topic for the day, audit of firm. Here it's very easy. Once you do LLP, this answer is very easy. Here firms means partnership firm. Usually question is asked more for LLP than partnership. That is why I made you do LLP first, okay? So appointment of auditors. Appointment of auditors is usually appointed by partners, either on a basis of decision taken by them or as per the partnership agreement. So either you can, in partnership firm, the partners mutually decide how to appoint an auditor, or it will be there in their own agreement that any of these three people can appoint or these two people can appoint, depends on their partnership agreement. Remuneration also you have to fix. Who fixes it? Partners fix it. There should be clear in letter of appointment, nature of audit, scope of audit, if any limitations are there. If there's any change of auditor, you have to communicate with previous auditor. All same points. Then auditor has to check accounting standards are properly followed. Then you have to see requirements of any statute. If there is any non-compliance, you have to qualify the report. Then matters to be considered without starting the audit. Before starting the audit, again, what will we read? We will read partnership agreement. See the answer repetition. Ma'am, every firm need not go for audit, right? Correct. Same like proprietorship. Once your turnover crosses the limit mentioned under 44AB of Income Tax Act, which changes, once that crosses, then only you'd get the audit done. Okay, Anil? Like proprietorship only. Like proprietorship only. Okay. So before we start the audit, we have to study partnership agreement. Now see, answer is same. Then business name, duration of partnership, amount of capital contributed, period end at which accounts will be closed, profit and loss, how will it be distributed, how will the books of accounts be maintained, how will the reserves be created, what will be the provision of depreciation, what will be the borrowing capacity of the partnership, rate of interest on capitals and loans provided by partners, whether any salaries are payable, duties of the partners, who will be the managing partners, who will operate the bank account, how will the surplus fund be invested, any limitations on restrictions, any rights and powers of partners. Can you see majority of the point were same as your Act of 1932 will apply? Yes. Indian Partnership Act 1932 will apply. So almost same points as LLP. So same things, just one or two extra points that maintenance of books, how will it be done, or bank account will be operated in what way. Just one or two extra points. So same as LLP. Everyone clear? Can I move ahead? So I don't want you to spend too much time on all this unless I tell you very specifically. You can read it every time. I'm not telling you to skip the topic. Skip nahi karna hai kuch bhi. But how much energy we have to give. So here, lesser energy. LLP, good energy. NGO, good energy. Government audit, very, very good energy. Like that. So you can give level. Advantages of audit of a partnership firm. Again, see, it helps in disputes. Same. It helps if there is any dissolution of partnership, retirement, death. It makes the audit reports more reliable, which means you can get loans or business purchase. It helps during admission of a new partner. It helps in proper control so that there is no disadvantage. Anything new again? Anything new are you studying? But still, you have to study once. Okay? Matters that should be taken into consideration in the audit of accounts. Okay? Remember this. This is a little important. if question comes in theory, you have to check your letter of appointment properly. What happens, I'll tell you practically. In partnership firms, sometimes it happens there are 5 partners, okay? You are a chartered accountant, you are an auditor, you have met 1 or 2 partners, they are telling you, oh, you are appointment, this is your letter of appointment, you start the work. Now, auditor has started the work, he has put energy in it, he has put his time in it, he has put his staff time in it. And after 1 week or 10 days, there is a dispute between the partners. Hey, why did you appoint him? It was appointed without our knowledge, and your appointment becomes a void ab initio. Your appointment becomes void ab initio if there is a dispute. So always check the partnership agreement properly, that whether your appointment was done as per the method mentioned in the partnership agreement, and whether your appointment is actually correct. Okay. So confirm the letter of appointment. It is properly signed, properly authorized. There is proper nature and scope of audit, proper limitations. Next, check the partnership documents, like study the minutes book, any capital expenditure, any loans, any extraordinary contracts. Study the objectives of partnership. What is the business of the partnership? Check the books of accounts. Examine whether books of accounts appear to be reasonable. See, everyone is working in mutual interest. Okay? There is no prejudice, no partner. There is no grouping happens. Ma'am, MCA will not monitor firms, no. MCA will only monitor LLP and companies. Only Income Tax Act can have some accountability for them, otherwise no one. GST also, if your firm is under GST, then GST audit can also happen. Okay. Provision for taxes, whether provision for taxes are properly made. Division of profits is done as per the agreed profit sharing ratio. So that's it. The object of examining partnership agreement is that auditor may be able to report to partners if interest of any partner has been prejudicially affected, and account a firm having engaged itself in an activity which is not authorized to do in violation of any provision. So you have to study who will monitor. Our country is very big. We can't monitor everyone. But there are many indirect ways. So Navneet, I'll tell you, for example, Navneet and Harsh are running a partnership firm together, okay? The turnover limit is not as per Income Tax Act, so audit is not getting done. But you have a current account in bank and you're depositing cash regularly. Then because of the bank sending information to Income Tax Act, you can get notice. So there are indirect ways in which you can be watched. As an individual also, even if I don't get audited, I don't have any business. But if I deposit a lot of cash, if I suddenly start receiving a lot of dollars in my bank account, bank can send the information to income tax, right? So from there, I can get notice. So the biggest way in which you, me, anyone is monitored is through our banking activities. Some get audited, some don't get audited. But every one of us are monitored through our banking activities. So partnership firm, even if the turnover is less than the criteria in Income Tax Act, so if your turnover is only 10 lakh, 12 lakh, you will not get audited under Income Tax Act. But you can still be monitored in terms of your banking activity. Otherwise, government says you are not important enough. Your turnover is so low. You are such a small cog in the whole wheel of this big wheel that we don't need to spend energy to monitor you. Is that clear? Is that clear, Navneet? Please say yes or no. All right. CA Akash Virmani is auditor of a partnership firm consisting of 4 partners. During this year, one of the partners has retired and another partner has joined the next year. Discuss any one point which shall be considered by you to ensure that the financial statements are not misstated due to change of constitution. Which means, again, simple things. We will check all of these points only. Letter of appointment is correct. Partnership documents are correct. This point also. We'll check the partnership agreement so that everyone is paid correctly. The goodwill has been paid correctly. The settlement has been done correctly. So this is just a generic point. So nothing special in this. This point is clear. Audit of a partnership firm. Okay. First question. Audit report in FCRA needs to be submitted when? Quickly tell me. Audit report in FCRA needs to be submitted 60 days from the end of financial year. Good. Next. Corpus fund contributions are exempted under which section of Income Tax Act? Corpus fund contribution are exempted under which section of Income Tax Act? Very good. Which of the following form is for statement of account and solvency for LLP? You remembered big name, smaller. Okay? ऐसा तो कोई फॉर्म ही नहीं पढ़ाया मैंने, तो ये तो कैंसिल ही हो गए. This forms I didn't teach, so very easy between 8 and 11. When can subsequent auditors be appointed in an LLP? When can subsequent auditors be appointed in an LLP? At least 30 days prior to the end of the financial year. Okay. As per Section 36 of LLP Act, documents of LLP maintained with registrar can be inspected by documents of LLP maintained with registrar can be inspected by any person. Very good. Done. So we are done here, students. If you have any doubts, the space is open. For next 3 to 4 minutes, you can ask me any question. I hope you understood the class, understood everything in the class. Today we had a very different class than usual audit class. I have tried to include as many tricks and tips as possible. Okay? Yes, ma'am, understood. Okay. Yes, ma'am, understood. Okay, good. Clear. Okay. All right. Clear. Okay. Okay. All right. So if you have no other question, we can end the class. Manish? No other questions, students? Can we end the class? Got the tricks, ma'am. Thanks a lot. Ma'am, do every auditor need to learn Trust Act, FCRA Act? FCRA you study a little bit in CA final, but Trust Act, no. After becoming CA, if you are interested, you can deep dive into it. Here we'll study the basics, but not deep diving into it. Okay, Anil? Any other question? Okay. Ma'am, Partnership Act is not regulated by MC or anybody? No. It is not. It is not regulated. Anyone else? Usually, Kuldeep, in states, you can get your partnership registered. So I remember where I used to stay, there was something called as District Industries Commission, and there was a local court place. And inside there was a building, there was a office. There was one office where you can get your partnership registered under local space. So there was one space. So individual cities may have some rules and local governments can have rules, but in general, there is Partnership Act only. Okay. Yeah, I know that. I am also from there only, Kuldeep. Anything else? Okay, I think Manish ji, we are done. We can end the class now. Thank you, students. See you next time.